Talking of sectors, one sector we're focused on, which is our sector of the day, as it happens, is gold. I should bear in mind also we've got the special investor event coming up at ausbiz on Thursday from 11 a.m. Eastern, where we'll be talking about the outlook for gold and those gold stocks. So I'd be really interested to get the view of both Philip and David here ahead of that. Of course. Now, this also comes after RBC has just given a significant boost to its target for the gold price and for the miners. It comes on the heels of the decision to raise their gold price predictions for the calendar year of 24 by around 16%. But they do see potential near-term downsides for the precious metal due to the uncertain containment of inflation targets before that rebound occurs. A mild recession is forecast to develop in later 24. That's their outlook. If the recession deepens, we could see average gold prices ranging between $2,200 and $2,300 US an ounce. On the other hand, if the economy experiences a softer landing and maintains stable monetary conditions, we may see prices dip to an average of $1,800 an ounce. So that upgraded gold forecast by RBC translates to an average 11% boost to the price in targets. All right, so David, gold, would you be buying those gold stocks at the moment?
Some of them, yeah. I think that there is actually very good value in many of the gold stocks. We have seen that the outlook for gold, as you said, is quite positive, and medium and longer term we've got a positive view on the gold price as well. But many of the Australian gold producers are still trading at a fairly decent discount to the current price. So yes, we do see that there are a number of stocks that are very good value in there. We do like the likes of Ramelius and Silver Lake Resources. We've got buy recommendations on them. Gold Road, which is another emerging producer, is one of the stocks that we like as well. And then we'll talk about Newcrest in a bit more detail and in the next stock.
All right, are you willing to go into the explorer space?
Tend to prefer not to. Gold Road is one of those ones that's emerging, so they've got their resource and are building that out. There's a couple. We've got a speculative buy on Pantero and Red 5, which are more in that explorer type space. But historically, that's a speculative end of the market. There's a lot of people who like to play there. To be honest, I don't spend too much time trying to bet which one's going to succeed or not.
Okay. Philip, your view? And I guess, we saw out of earnings season too, those costs remaining an issue for a lot of producers at the moment.
Costs are definitely an issue, particularly if you're WA based. Very tight labour market in WA. We're trying to import some more, but it's still quite tight. But it's interesting, those gold price forecasts. We like gold. Currently it's about 1,900 an ounce or thereabouts.
Yep. We
think it should be higher, above 2,000. So if we're going into a recession or a slowdown, we probably will see that $2,200 an ounce. Not pricing that in at the moment, but the other thing we're forgetting is with the Aussie dollar weakening, our Australian-based producers paying Australian dollars in costs are exporting at a higher Aussie dollar price. Now, some of them are hedged, but you have the perfect storm where your costs are in Aussie dollars, but you're selling in US, so that your cost base is local, but your revenue is going up, your cost base is not being affected by inflation, by currency, maybe some labour input cost, but not by the Aussie dollar. So unless they're hedged, those jaws are opening. So to be an Australian producer at the moment with the currency weakening, because the view the market seems to be taking is we may not get any more rate rises and we may get a cut next year. If we get US dollar gold over 2,100, 2,200 and the Aussie dollar falling, that's great news for our domestic producers because your costs aren't changing and you're getting higher revenue. So we very much like the gold space, especially if you're an Aussie producer. So I'd be favouring an investment in space, not just for hedging reasons, because if we do go, other stocks will fall if we go into a recession, but for a hedge point of view and from an increasing the jaws point of view, I think gold stocks are worth a look at if they're Aussie producing stocks.
Any particular ones? You're favouring the larger producers, or are you
from a risk point of view? Large is always better. I own Northern Star, pays a good dividend. Performance been mixed, but I kind of like that one. If it's, you don't buy a resource stock for a dividend, but if it's spitting out cash and paying a dividend, isn't spending too much on capital expenditure, I think it's worth a look.
All right, and once again, as I asked David, any interest down at the other end of the spectrum with the explorers?
Look, we do. We like the explorers. The issue with the explorers is they can burn cash in the short term until they find something. So if you're truly nervous the market, you're better off something producing cash rather than burning cash. So I would steer to the larger caps just for the next 12 months as we work out where the economy is actually going.
Yeah, okay. All right, so that's the sector being gold. And as